This week, the S&P 500 is breaking out to new daily higher highs, and we are now in short squeeze territory. Is it going to be a bull trap, or is this the real deal breakout and we're going to higher prices? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart. See what's going on in the stock market today. All right. So first things first, I want to throw up a chart that I showed you in the past of how many short sellers that we were starting to accumulate this year. And we were hitting record numbers of short sellers, which told us the market was likely going to go higher. If you're in the Stocks Channel Discord, this is the type of extra information that I'm supplying you. And you're also getting the members only videos that have been reminding you to stay bullish this year, because of all of the reasons we were likely going higher and not lower. Remember, trading is about stacking the odds in your favor with proper risk management, and it has nothing to do with having to guess the exact direction of the market. That allows us to stay profitable even when we're losing trades, but more often than not, with proper risk management and being on the right side of the trade more often than not, we are remaining very profitable in this market because we're constantly stacking the odds in our favor with proper risk management. So now that SPY is breaking out and we're looking at all of these short sellers that have accumulated into this market, we know those short sellers have to become net buyers to cover their short position. And now that we're breaking out, they're taking on way too much risk if they do not cover. So for that reason, while this may be a bull trap breakout, more than likely due to what's going on underneath the surface of the market, we are now going to see some type of short squeeze to higher prices until these short sellers cover. And then because the market loves to cause maximum pain, once all of these short sellers cover and everybody is starting to think the market is bullish, then and only then will we see that full-blown correction that everybody is bracing for. Remember, the theme of 2023 has been the market's going to crash and the bear market of last year is not yet over. And there's just so many people that are still extremely bearish or neutral sitting in cash that cannot objectively follow the chart because they are just too fundamentally bearish, and they will not allow themselves to be objective and follow the fact that the chart is going higher. To each their own, and you can trade however you see fit. But here on the Stocks channel, we trade price action and trend. And right now, looking at this chart of SPY, we still have bullish price action and a bull trend, even though I have to acknowledge we are coming into some very critical resistance areas that we need to be careful of. Alright, so now that you understand what's going on underneath the surface with all of the short sellers and this bullish breakout, this is going to be a very simple chart to trade because we have very well-defined risk and we have a very strong bull trend. Just very quickly looking at the moving averages, we can see that we have all of the moving averages positively sloping and stacked to the bullish direction with price above all of the moving averages. And we now have the bull breakout from the February highs above SPY 417. Now in the short term, we were getting outside the upper Bollinger Band on the daily chart as we hit that price target and resistance at SPY 420. So there is a very good chance we need to retest the breakout before going any higher. And so far, it does look like we are starting to get that retest, which means we're going to need to see SPY bouncing off of 417 or down here between 412 and 414 before we go any higher to hit those price targets above. So for that reason, because we have the bull trend, you can still buy the dip at these support levels once we go down to those levels to test them, as long as we're getting a positive reaction and a bounce from these levels and continuing the bull trend. Remember, I just talked about how you want to stack the odds in your favor. And when you have a bull trend, the odds are in your favor if you're buying at support and going in the direction of the trend. So that means you would be buying at support levels as we get the opportunity and pull back into that support, and not freaking out screaming the sky is falling and we're going to crash just because we're getting some red candlesticks. Once you learn to follow price action and you block out all of that noise, which there has been plenty of noise this year, especially from you bears, constantly been saying the market's going to sell off next week. And you have been saying that for over 5 months now, and we just continue to go higher. So eventually you're going to wake up and realize you guessing the market is going to crash is not how you properly trade. You need to eventually take on risk. And to do that, you're going to feel uncomfortable at times if you're buying the dip while everybody is bearish and screaming the market is going to crash. That's why I say block out all of the noise and follow the price action, because if you let that noise get too loud, there is no way you are going to have the confidence to buy the dip near support when everybody is screaming the market is going to crash and telling you there is no way you should be buying the dip. We don't need to argue that anymore because facts are facts, and we now know the market has continued to go higher. So there is no reason to sit here and debate on whether or not this is a bull trend, because objectively we know that it is. So for that reason, I am staying bullish until SPY breaks down, breaks below a lower low, and confirms a downtrend. I have been saying how important it is to get price action confirmation all year long, and nothing is going to change that. We need to see lower highs and lower lows before we get bearish. And right now, as we're getting this pullback into support with the current bull trend, that is going to be a buying opportunity. That doesn't guarantee we're going to win every single trade, but that guarantees we're staying objective. So now in order to get bearish, we're going to need to break down below SPY 410, or we're going to need to see some type of confirmation of lower highs and lower lows from these higher prices. That can happen many different ways, but a simple way to do that would be that we start to reject from this resistance, make another lower high and continue lower, and see some type of downtrend starting to form, which is going to require a break of critical support and the support trend line. So just remember to stay objective and have a very clear trade plan that is ready for any scenario, because yes, there's always going to be the scenario that this was a bull trap and we're coming all the way back down to the 200 daily moving average, and we know the bears like to take the elevator down, so yes, that could happen very quickly. What could happen now that we are starting to get the short squeeze is we could short squeeze to our targets in the 420s, get all of those short sellers to start to cover, and then come down here and fill these gaps at a later date, because a lot of those people that just got burned shorting would likely sit on the sidelines during the next drawdown because they just got so heavily burned trying to short, they may not bother trying to short the next down leg lower. Now again, there is a scenario where we just continue to go higher all the way back to the August highs and hit that level at SPY 430 before we see any pullback or correction. So you need to know all of these scenarios, and as I always tell you, the trend is your friend, and right now the trend is still telling us we're going higher. So there's no need for us to be overly worried about going down to the 200 daily moving average until we start losing critical support. Again, we're letting the chart do all of the talking. That is not our opinion. That is simply reading that the chart is in a bull trend with bullish price action and breaking out to a higher high in the short squeeze territory. There's nothing subjective about that. It is 100% exactly what the chart is telling us. So there's none of our bias or opinion saying the market's going higher. We are simply looking at what is happening, and the odds tell us it's likely going to continue to happen until price action tells us otherwise. So stack the odds in your favor and know all of these critical support levels below at 417, 414, and 412. And as long as we're above those support levels, the odds favor higher prices to take us to the gap fills at 421, 425, and then a retest of the August highs at 430. If you don't think it's possible to get to the August highs, simply go look at the triple Qs and see that they've already broken above it. If the big tech sector is leading the way higher, we could see SPY just lagging behind. And then next, let's jump over to a weekly chart of SPY, and we can see on the weekly chart of SPY, we also have bullish price action above all of the moving averages, and all of these moving averages are positively sloping and stacked to the bullish direction, which means the fastest moving averages are on the top and the slowest moving averages are on the bottom. That is 100% a weekly bull trend, which is now breaking out to a higher high, which is the break back over that February high, which was right around SPY 412. On this weekly chart, we have higher lows and higher highs, and it even looks like we have a double bottom breakout from the 380s as long as we're trading above SPY 412. So there's just really no way you can look at this chart and say that we're about to crash, because we have bullish price action in a bull trend and we're still above all of the critical support that defines our risk. Jumping over to a daily chart of the NASDAQ 100 triple Qs, we can see that we were down 0.23% on Friday. And again, I told you to expect a cool down because we were way outside the upper Bollinger Band, and there's a very good chance breaking the August highs that we need to backtest that level as support before we can go any higher. That means there is a very good chance the triple Qs are coming back down to at least 333. Because if I zoom out, that is the exact point we broke out above, which was the August 2022 highs. That is a very significant breakout because that was a very significant bull rally last year. And then we had an epic failure of that bull rally after a double bottom, and we're breaking out, and now we're clearing back above that level yet again, which could be a complete technical pattern that we've double bottomed and we're getting the breakout and we're resuming back into a strong bull trend. Obviously, that means we're going to need to hold this successful retest of the breakout, which is going to require a bounce from 333 or this breakout down here right around 327. You can see all of these moving averages are positively sloping and prices above all of the moving averages. So we're also going to have support from the rising 20 daily moving average, which is also going to rise into that zone. Now on the triple Qs, we have a very powerful bull trend since the double bottom, and the big tech companies have absolutely been leading the way higher because they don't have exposure to those financial stocks. So with big tech leading the way higher, eventually we are going to see that relative outperformance cool down, and we could see more relative strength in the small caps and the stocks in the S&P 500, like the other sectors with financials, industrials, and healthcare. So just keep all of this in mind while you're building your trade plan, that big tech has been the strongest, but we could be seeing an end of that cycle, and we could see relative strength in some of the other sectors as we move into the summer. So while the triple Qs are looking very bullish, we have to acknowledge we're at very critical resistance between 337 and 339. I don't expect to see some crazy parabolic move higher from here, so there's really no reason to be overly bullish in the big tech stocks until we can see some type of consolidation and retest of that breakout. So manage your risk right there at 333 and 327 and that rising 20 daily moving average, and don't let anybody scare you out of your positions. Make sure your exit strategy is part of your trade plan, whether it's for loss or for profit. You need to know exactly when you're exiting your trades, and you need to execute to your plan. If your plan's not working, at least you can go back and figure out why, and you can continue to refine it and become a better trader. And then very quickly, I want to show you a weekly chart of Apple stock, because if you go back and you look at the bear market of last year, we had a double correction in Apple stock where we finished out 2 legs to the downside, and it does look like we have now double bottomed off of Apple 130, broken back above the August highs, which was right around 172, and we are now 4 weeks back above the downtrending channel on the biggest stock in the stock market. So when you look at how close Apple is to all-time highs, or at least retesting all-time highs, you can tell that this is not a raging bear market that everybody wants you to believe in. If this was a raging bear market, there is no way Apple stock would be approaching all-time highs and flirting with the fact of breaking out and continuing to going to a brand new all-time high. You can see by the moving averages and the price action on this weekly chart of Apple that we're in a very strong uptrend. And while that doesn't guarantee we have to keep going higher, we know the odds are in the favor of continuing to climb higher while we're in these strong bull trends. And we simply need to manage our risk on Apple stock down here between 168 and 170. So as long as you have stocks like Apple that are moving the market higher in strong bull trends and pushing the indices to higher prices, which is likely going to lead to short squeezes, you have to understand that the market is a technical thing, and right now, technically speaking, it's in a bull trend and it's going higher. Does that guarantee the bear market won't return, or that we won't hit a recession and eventually see the market go to much lower prices? Of course, we know that is a possibility, but we need to see it in the chart, and we need confirmation through price action and trend. So just to quickly summarize, we'll move back over to the S&P 500, and yes, we acknowledge we are at critical resistance and we're getting a little overextended in the short term, which means we're likely due for a 2 to 3 day cool down back to the retest of the breakout. And if that retest is successful, we are looking for a continuation of the bull trend. Again, as traders, we have no care in the world whether we go higher or lower from here. We simply want the odds in our favor. And with the bull trend and the bullish price action, the odds are still in our favor to buy the dip at support and expect a continuation higher. If we break down through critical support and get back into a confirmed downtrend, we can instantly adapt by managing our risk and continuing to go with our trade plan with the bearish scenario. Now, if you're having any issues with this market, keep in mind that I have 2 services with the Stocks Channel Trading Discord, and I also have Bank Trade Alerts, and both of these services have kept you on the right side of the trade all year long. Bank Trade Alerts will send you all of your buy and sell alerts for TQQQ and SQQQ, so you never have to guess what to buy and when to buy and sell it. And the Stocks Channel Discord will give you all of your intraday updates and analysis to help you make those decisions on your own. So if you still need help in this market, you can check out those links in the description below. And just keep remembering there is going to be a lot of noise in the market, especially this week with the debt ceiling. So it's very important you have a trade plan that is built around objectively following the price action and the trend, and with proper risk management. Don't let people scare you out of your positions. If you are exiting a position, it should be part of your plan. And if you are entering a position, it should be part of your plan as well. So let the price action and the trend do all of the talking, and you're going to do very well in this market if you're using proper risk management. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.